Today's video, I'm going to be showing you how you could take any deduction as a business owner. Now, it's so important for you to understand what qualifies as a business deduction because the IRS looks at specific codes and regulations that they have laid out, which we will be uncovering in today's video. So first, you need to understand there's one tax code that all business owners must understand, and within that one code, there's 4 sections that you need to make sure every type of expense in your business qualifies for. And this is exactly how you maximize your business deductions and pay less money to the IRS. So first, let's go straight into the tax code. It's code section 162A. Why are we looking at the tax code? We're talking about business deductions. Well, what you need to understand about the IRS is everything is laid out in the IRS codes. The IRS goes by rules. If you're ever audited or if you ever go to court by the IRS, there's a foundation to everything. So what you need to understand is there's a reasonable basis for how the IRS looks at businesses, and that basis is laid out in the IRS codes. So the code that we're looking at today is code section 162A. Now, if you understand this one code section, you'll be able to maximize in almost every single tax deduction possible as it relates to your current business or any potential businesses that you have planned. I'm going to be reading this directly from the IRS code section. Then we're going to be breaking down each part that you must understand. I understand reading codes or regulations sounds very frightening, but I'm here to make it simple for you. You're going to understand exactly what the code section means, and we're going to take out all the irrelevant information and only include the relevant information as it relates to maximizing your tax deductions. Let's get into 162A. So first we have here the title of 162A is literally says trade or business expenses. So right off the bat, we could see that the IRS allows us to take expenses for businesses. And that's one thing that many W-2 employees don't get to take advantage of. Just by that rule alone, there's very limited W-2 deductions that could lower your taxable income. So that's one of the reasons why we usually push for clients to typically have some type of business or rental property, because a rental property also is a business that qualifies for expenses that are deductible to limit your taxable income. While we're talking about limiting taxable income, I do want to take a second to actually talk about the effective tax rate versus the standard tax rate. That's what you really need to understand. As a W-2 employee, you're probably going to be in a very high standard tax rate if you're making a lot of money, and also paying a lot of effective taxes as well, because you don't have that many strategies to deduct from your W-2 income. But as a business owner, this allows us to be very flexible and really to bring that effective tax rate down. And if you don't know what an effective tax rate is, that's the taxes that you actually owe compared to the standard tax rate that the government puts you in based off the bracket you're in. So 162A, trade or business expenses, that's the title. Section A, in general, there shall be allowed a deduction. Shall be. Very old school English there, but let's talk about the word shall for a second. Shall also means should, as in it's completely legal. It's not illegal here. So there shall be a deduction, all the ordinary and necessary expenses paid or incurred during the taxable year in carrying on any trade or business. All right, it goes into 3 more sections here. We're going to get into that, but let's just take a pause here and talk about what we just read. What does that mean? Let's put it in English here so we actually understand what's going on. So one of the first things about this code section that you must understand is the last part of it. It says in carrying on any trade or business. So the first part of this code section talks about taking deductions for expenses, and then the second part says in carrying on a trade or business. So what does that tell you? One of the first things you have to understand to take a deduction for businesses is it has to be for business purposes. So what does that even mean? That means that you are operating a business for profit. That means your intentions is to gain and make income from trading your services or from selling goods. So the first thing that you need to understand is your expenses must be incurred for your business. It must be business related. If you have any expenses that are not related to your business, those will be considered non-deductible because it's not related to your business. It's very clear here that the IRS code section 162A clearly states in carrying on any trade or business. So what is a trade or business? A trade or business is an activity that we conduct for profit, for gain. So that could either be trading a service or selling a good. So some of the things that I think about when it comes to considering if it's business related, I think about what was the business created to do. For this example, let's talk about real estate. Let's say that we are a real estate investor and we buy long-term rental properties. Our business purpose is long-term rentals. So the expenses that I incur in my business, I want it to be related to being in the real estate industry. So if I'm in the real estate industry, I'm not going to be purchasing medical equipment that doesn't relate to my real estate because that would be considered non-deductible. Now, let's say you did want to consider deducting medical equipment. Maybe you might want to consider opening a whole nother business where the business purpose is to be in the medical field. So now it opens up the door for you to take deductions in other areas and you don't have to worry about mixing two businesses. So it's so important that as a business owner, you know that you're supposed to be separating your businesses. It provides more evidence and more support to your deductions. So you don't want to try to open up one entity that is specific for one industry and try to take expenses outside of that business for other types of businesses that are not related to that main business that you have. So let's continue here. The next thing that really sticks out to me here is ordinary. What does it mean when you say ordinary? It literally just means that it's something that you conduct in the regular course of your business. So right back to real estate here. What are some things that we might want to consider as being ordinary in real estate? Maybe you're driving around town looking at real estate properties. Now you could think about, okay, I'm using this vehicle for businesses. So now I could consider how I could leverage this vehicle in order to take deductions in my business. So that's what it means, ordinary. What are some activities that you do on the ordinary day-to-day task in your business? So for example, if I have a non-remote job where I'm literally just at home and I don't have to travel or do anything related to vehicle, it's harder to support an auto deduction if your business does not require to use your vehicle. But if you are a seasoned business owner, you know that networking and meeting business partners are all part of growing your business. Now you could think, okay, even though I have a home-based business, I still could do activities in my business. So now I could consider taking the auto deductions because I'm leveraging things like networking and meeting with business partners and clients to take deductions and take advantage of those auto deductions. So now that you understand that, you could start to get more creative with the things that you're doing in your business. What would you consider to be ordinary for growth in your business? And in the same manner, now that we're talking about growth, the third thing that really sticks out in this code section is necessary, meaning that you can't just take expenses that aren't necessary in your business. When you say necessary, you have to question, what are we talking about? Necessary for what? The answer to that is necessary for profit. You want to be doing things and getting expenses in your business that are necessary to be profitable in your business. So anything that you could argue or could support that you incurred or paid in order to grow your business, that means that it was very necessary for you to operate as your business. And like I said before, depending on your industry, depending on the type of business, necessary is a very broad term, and you could really make necessary specific to your business model the more unique your business is. So having things on your website and marketing materials really supports the type of business that you are and the products and services that you have to your clients. So the more documentation that you have, the easier it will be to support what is considered ordinary and necessary for your business. All right, so now that we have kind of uncovered those 3 things, there's actually one more thing that you really need to understand. But before we look at that last one, let's go ahead and look at the last 3 tips that the IRS has on this code section here. We left off at carrying on any trade or business, and then it says including. The IRS is so generous, they even gave us 3 examples of things that we could deduct in our businesses, just to make it very clear to us that these things are deductible if it's ordinary, necessary, and you're conducting it in the regular course of your business. So number 1 here, a reasonable allowance for salaries or other compensation for personal services actually rendered. Basically what that's saying is we could take salaries and pay people that are rendering service for us for our business to profit. One thing I want to point out here is it does not say you're limited to taking a salary for yourself as the business owner. Now there's certain strategies as it relates to S&C corporations where you can take a salary in your business and be able to deduct it from your business and have that amount not be subject to self-employment taxes, which we're not going to go into too much detail today, but just know that that is an option. So the second example that the IRS provides for us here, it says traveling expenses, including amounts expended for meals and lodging other than amounts which are lavish or extravagant under the circumstances while away from home in the pursuit of a trade or business. There's so much loaded in that, so let's actually break it down and understand what's going on with the traveling expenses, how we're able to deduct meals, lodging. So obviously this second part here is talking about travel expenses, and the biggest key to understand is while away from home in the pursuit of trade or your business. So when you're thinking about traveling, you have to think about what is the parameters of your ordinary day. First, you got to consider what are the parameters of your commute on a day-to-day basis. And anything outside of that commute, you could arguably say it's outside of your home, and you could consider travel deductions and be able to leverage things like meals and lodging for traveling if it's outside your ordinary commute. So that's the biggest thing to understand there. This is the 4th thing that you really need to understand for any type of business deduction is it cannot be lavish or extravagant in nature. So when you think of something not being extravagant or lavish in nature, you have to think about the dollar amount that you're paying. Consider the market value. Are you paying 2 to 3 times over market value for something? That could be considered lavish in the eyes of the IRS. You also have to consider the profitability of your business. Is it something that actually makes sense for your business, or is it something that wasn't necessary? So those are just some of the things that you have to consider when you're thinking about what is lavish and extravagant in nature for your business. So as you already know, code sections are always changing, and when it comes to meals, currently we are limited to 50% deductions for the most part. Now there are circumstances where you could potentially take 100% deduction, but just know that this rule is always changing and you're not always going to be able to deduct 100% of your meals. But for the purpose of this video, just know you have to maintain and stay on top of the rules as it relates to meals. Now let's talk about lodging. So for lodging and traveling in general, there are also creative rules on how you could take deductions for days that you aren't doing business. So be sure to meet with your CPA and ask about those certain rules. But for the most part, if you're conducting business, you're going to be able to deduct travel, meals, and lodging on the days that you're conducting business, which also includes the day that you go out to travel and the day that you come back for your return. Both of those days can be considered business days, which are deductible and would qualify for travel, meals, and lodging deductions. So the last example that the IRS provides for us here is rentals or other payments required to be made as a condition to the continued use or possession for purposes of trade or business, to which the taxpayer has not taken or is not taking title, or in which he has no equity. Basically, it's saying that, hey, you could deduct any rent that you're paying for your office space, for your building, as it relates to your business. So if you weren't aware of that, there you have it. There's also the home office deduction. So if you have a home-based business, the portion of your home that is being used for your business, you're able to leverage a portion of that and deduct it. So be sure to get with your CPA in order to understand how to actually maximize the rules and regulations as it relates to this. So there you have it. To review things here, first you want to make sure that your deductions and expenses are business related. Second, ordinary. Third, necessary. And fourth, not extravagant or lavish in nature. Until next time, that's Jacob Sannon, the Innovative Tax CPA.